Hello, greetings, and welcome to Dividend Blasters. This is our 63rd video, and our topic today, strategic dividend investing, buying opportunities in the energy sector. That's right, we're going to cover all of the holdings in this sector that makes up about 5% of the entire market economy and identify those which I believe are buying opportunities at this time. First, housekeeping. A disclaimer. I'm not your financial advisor. Purpose of this video is for financial information and education. Should not be taken as financial advice. It reflects my own personal opinions, my research, and experience as an independent investor for more than 30 years. So please do your own research, consult a financial advisor prior to making any financial decisions. So, as we've done in the last three videos, and this is really part of a series, we are going to cover the energy sector. To date, we've already covered consumer staples, we have covered healthcare, and industrials. And what we do is we look at the holdings within each of these sectors. And these sectors, basically, what we're looking at ETFs managed by State Street Bank and Trust Company that mirror the 11 sectors. We're looking at the holdings to see, hey, is there a buying opportunity here of this key holding in this important sector? So that's what we're looking at. As you can see with energy, year to date, they are up a little more than 3%. That doesn't mean every holding is up. Several of them are down year to date, and there may be buying opportunities. And you know what? Just because something is down doesn't mean it is a buying opportunity. We got to look at other things. And just because something is up doesn't mean it's overvalued. Like I said, we're going to look at other things. So let's press on. So here are the 11 sectors. If you go to the left, fourth panel down, you'll see the energy sector. And each of these represent one of the ETFs in the Spider sector tracking family of State Street Bank. XLE is the ETF. They closed yesterday, Friday, October 20th at $90.26. If you want to buy this ETF, you can buy it right from your online broker. It's traded just like a stock. Has a competitive um, expense ratio of 0.10%. This sector makes up 4.8% of the 11 sectors. So let's press on. So here's a little bit of a closer look. As I mentioned, 4.8%. You can see that price performance to date, actually for the last 1 year and the last 5 years, has underperformed the S&P 500. Gas and oil, not as popular. People are selling it. But I think there are buying opportunities. And you know what? Most of us buy oil and gas stocks, not for price appreciation, although when it happens, it's nice. We buy it for total return. A lot of these companies pay very healthy dividends. They are cash machines. That's why I invest in some oil and gas companies. A little bit more background, you can see that year to date, the price of the barrel of crude oil is up as it is for the last 5 years. And interesting articles being written that basically recently energy stocks are on the way up price wise because of the price of a barrel of crude oil. We've seen the price of oil go up in the last couple of years. We know that going to the gas station, gas is up because we're not producing enough. But that's a policy issue. I'm not going to get into that. That could be another video. But I'm speaking as an investor, something to think about. As prices go up, maybe we want to get in. So let's talk about XLE, this index, and what the holdings are. So I'm going to go through the list to show you what are the key holdings by weight from highest to lowest. And you're going to recognize a lot of these. The heaviest weighted one is ExxonMobil for 22.25%. Closely behind in number two position is Chevron, 18.42%. Then EOG Resources, distant third, 4.87. ConocoPhillips, 4.59%. Schlumberger, 4.44%. Marathon Petroleum, 4.27%. Pioneer Natural Resources, 4.16%. Phillips 66, 3.58%. Valero Energy, 3.27%. Hess Corporation, 3.21%. Occidental Petroleum, 3.08%. The Williams Companies, 3.02%. One OK, 2.82%. Halliburton, 2.72%. Baker Hughes, 2.51%. Kinder Morgan, 2.3%. Devon Energy, 2.2%. Diamondback Energy, 2.11%. Coterra Energy, 1.57%. Targa Resources, 1.37%. Marathon Oil, 1.23%. EQT Corporation, 1.09%. APA Corporation, 0.93%. Those are the 23 holdings in this market sector within this ETF XLE. All right, so you've seen which are the holdings. Now I'm going to show you which ones have come down in price year to date. You may be surprised because it's not as many as we might think. And of the 23, only 4 have come down. Leading the pack, Devon Energy, they are down 21.44%. APA Corporation down 9.68%. The behemoth, number 2 by market cap, Chevron in this sector, 7.05% down. And last but not least, Kinder Morgan down 6.03%. The rest of these have gone up. Let's go through those quickly. Exxon Mobil up 0.71%, just barely maintaining its price. EOG Resources 2.86% up. One OK up 2.86%. Valero up 3.41%. Oxy or Occidental Petroleum 3.48% up. ConocoPhillips up 5.14%. Marathon Oil up 5.25%. The Williams Companies up 6.14%. Halliburton up 7.01%. Schlumberger up 8.89%. Phillips 66 up 9.09%. Pioneer National Resources up 9.87%. Hess up 14.95%. Coterra up 17.75%. Targa Resources up 17.95%. Baker Hughes up 17.98%. Diamondback Energy up 21.71%. EQT up 25.18%. Marathon Petroleum up 29.62%. So what you see here is that the vast majority of them have gone up. And there has been a lot of literature written that basically, hey, what's the relationship between the price of a barrel of crude oil versus stock prices? You think it's 1 to 1, but it's really a little bit more complicated. There's a lot of literature that kind of gives you both sides that yes, there's a causal relationship. No, it's a correlation, but how strong is it? Or it's an inverse relationship. It's complicated. But what you see here is that a lot of these have gone up. A handful of them are down. Uh, I want to show you what I believe at this time are buying opportunities. What I'm going to do before I show you my methodology, I'm just going to list them. I'm going to show you my 4 picks for what I believe are bargain buys or best buys at this time. Ready? Here we go. The 4 are Chevron, ticker symbol CVX, ExxonMobil, ticker symbol XOM, EOG Resources, ticker symbol EOG, and Diamondback Energy, ticker symbol FANG. How did I do this? Okay, I looked at price, but I also looked at, as I did in the other videos where I looked at market sectors, I looked at dividend performance. So I'm looking at the yield, I'm looking at the dividend growth rate. I want to see a healthy yield, but I want to see a growing dividend performance over several years. That's what I want. So typically, I like to see 3% yield and at least a 5% dividend growth rate. I also like to see a history of growing that dividend of at least 5 years. I want to see a dividend payout ratio in the range of 20 to 60%. I want it in that range because I don't want it to be too low because it tells me, hey, they're not putting enough money into the dividend. If it's too high, I get concerned that maybe the dividend isn't safe. I'm going to be looking at cash flow. I'm going to be looking at levered free cash flow margin. And how am I going to look at that? I'm going to look at its specific levered free cash flow margin compared to everybody else in the market sector. I'm looking at the sector median. I want to see something that is at that level or higher, really higher. If it's lower, I'm probably not going to select it. And it could be fine. But you know what? I have scarce dollars and I want to be safe. I want my investment to be safe. I'm looking for the best. And then I'm going to be looking at valuation. I want to look at a PE ratio that is competitive. I want it to be at or lower than the market sector. So let's take a look at our monster chart. Okay, as you can see, I have selected one of the four where the price has come down. And then the other three, the price has gone up that I have selected. All right, so if anything is red, basically it's eliminated. So if you have a 5-year dividend CAGR of 0%, or if it's negative, you're out. If you have a dividend growth streak of less than 5 years, you're out. If it's 4 years or 3 years, I'm going to give you a yellow. I may not select you, but I might. Okay, if you're close and if you've got the other metrics moving in the right direction. But if it's red, if it's like 2 or less, I'm going to say no, maybe next year. We'll see. Dividend payout ratio, I want to see 20 to 60% range. If it is less than 20 or if it's greater than 60, you're probably going to get a yellow. If it's like above 90%, it's probably going to be a red. If it's less than 10%, you might get a red. Anyway, levered free cash flow margin, if it's negative, you're probably going to get a red. You'll get a yellow if it's at or less than the sector median. You can see we got a few of those. PE ratio, I want to see something below the sector median. If it's a little bit above, you're probably going to get a yellow. If it's significantly above, you're going to get a red. So as you can see, APA Corporation, there's a couple of reds with the dividend CAGR and the dividend growth streak. I'm not going to select them. So which one did we select? We selected Chevron. They are down they're down 7.05%. So we bolded them. Dividend yield 3.57%. That's a healthy yield. An impressive 6.03% dividend CAGR. They got a dividend growth streak of 35 years. Dividend payout ratio, that's safe 36%. I like that levered free cash flow margin 10.9%, significantly more than the sector median. And now here's a slight deviation from our rule. They have a PE ratio of 12.13%. It's higher than the sector median, but not by much. It's a little bit higher. Sector median is 10.77. I looked at all the other metrics and I decided I like Chevron. They're in. Next one, ExxonMobil. ExxonMobil is up barely, price-wise 0.71%. But you can see we bolded everything. Dividend yield, 3.22%. The CAGR is a little bit underperforming, 2.74%. So I gave them a yellow. But look at the dividend growth streak. It's 24 years. They're going to keep it going. Dividend payout ratio is safe, 28.61%. Levered free cash flow margin, it's a little bit less than Chevron's, but it's 8.7%. It is more than the sector median. The PE ratio, it's a little bit more than the sector median. It's 11.97. I gave my yellow, but consider their size and their ability to scale. I say yes, they're in. Next one, EOG Resources. Okay, they are actually up 2.86%, which is not a lot. Okay, and I have said that sometimes I do buy stuff that is going up if I think it's a good buy. The dividend yield, they get an off green. It's less than 3%. It's 2.42%. So it's a green, but it's an off green because it's a little below the 3%. But the dividend CAGR is impressive, 34%. That is amazing. They have been increasing their dividend for 6 straight years. It's more than 5. Dividend payout ratio, it's safe. It's 26.5%. Levered free cash flow margin is really impressive, 19.6%. That is very high, much higher than the sector median of 6.79%. Now, the PE ratio, it's a little higher. It's 11.79. They get a yellow. But considering all the other metrics, I am going to say yes, EOG is in. You can see a bunch of reds following that. So One OK, Valero, Occidental, which I do like. I think that's a great company, but they have a red on their dividend CAGR and they have a red on their growth streak. ConocoPhillips, I have had several shares of that, and I think it's a great company. But their dividend growth streak is only 2 years, and I see that the PE ratio of 14 is a little bit high for me. Now, you know what? Some of these you may have, and I'm not saying sell them. You probably got in at the right time. I'm just saying maybe at this time you might want to hold off on buying. That's all. If it's red. Halliburton, I see a bunch of reds, especially the dividend Kager, as well as Schlumberger, and I think the PE ratio is a little bit high. More dividend growth streaks below are red, so Pioneer, Hess, Coterra, and Coterra I think is a nice dividend paying company, and I really like their levered free cash flow margin, but they've had a hiccup there in the dividend growth streak. Targa, they got a negative dividend Kager, so I'm going to say no. Baker Hughes dividend growth streak is 0, and the PE ratio is a little bit high. So then what's next? Well, what's next is Diamondback Energy. Now, Diamondback, their price is up. They're up a lot, 21.7%. But look at these other metrics. Dividend yield, 1.99%. I gave them an off green, but that dividend CAGR, it's very high, 66%. Now, you know what? If I saw a dividend growth streak of 0 or 1 years, I probably would say no. But they're at 4. They're keeping it going. They will probably get to 5, and that 4 will become a 5, and then they'll be green. And I'd say I like the dividend payout ratio. It's safe, 35%. The levered free cash flow margin, 7%. It's more than the sector median. And even though the price is up, the PE ratio is less. It is less than the sector median. It's 9.36. So even though they've had 21.7% price appreciation relative to their earnings, it is a buy. So those are my selections. Now, you know what? What you'll see is a black line at the bottom, and you're going to see 3 more holdings. Well, you know what? British Petroleum, Shell, and Sunoco are not part of this ETF holdings list. They're not in there. But I thought, well, you know what? I want to take a look at them. I think it's worth looking at. So I looked at British Petroleum, I looked at Shell, and I looked at Sunoco. And you know what? I saw a bunch of red in the dividend CAGR and in the dividend growth streak. I saw a very high dividend payout ratio for Sunoco. So I didn't select them. And so maybe there's a reason why they're not in the ETF. But anyway, I wanted to look. I went a little above and beyond this methodology we've been doing. So that is it. Our picks are Chevron, ExxonMobil, EOG Resources, and Diamondback Energy. Folks, that's it. I hope you found this to be enjoyable and informative. I'd ask you to please give us a like, subscribe to our channel here at Dividend Blasters, and share this video with a friend. Please consider following us on Twitter at DividendBlast99. Also on Instagram at Dividend Blasters. Until our next video, have a wonderful day. God bless.